panel. Maybe just to give a little bit of perspective about what's happening in the renewables market in general. Globally, as you might already know, the energy transition is facing some serious headwinds due to the geopolitical tensions in Europe, the status of the energy market, and the whole recovery, the economic recovery that's been staggering for many countries and regions around the world post-COVID. If you looked at the latest reports from IRENA or the UN IPCC, they all talk about the current, actually, I would call it failure in being able to be on track to achieve at least a 1.5 degrees Celsius cap on the temperature rise. Current numbers, actually, just to give a bit more detail on that, last year, total deployment of renewables globally was around 270 to 180 gigawatts, and it needs to be around 1,000 gigawatts. We're talking about quadruple, at least 3 to 4 times the rate of the current deployment, to be able to hit 10,000 gigawatts of renewables by 2030, to be able to be on track to hit a 1.5 degree rise by 2050. This is happening, obviously, while we have countries with massive role in the energy space, like the Kingdom of Saudi Arabia, announcing very ambitious and very, very massive targets for decarbonization. In Saudi Arabia, there are 2 underlying or overarching goals for the policies that come under Vision 2030 and the National Renewable Energy Program. Obviously, we have the announcement of the Kingdom to hit net zero carbon by 2060. And also the second very important goal of achieving 50% of power generation being generated from clean energy sources by 2030. And really, if you try to put some simple math on the last target of 50% clean energy, if you try to hit it today, if you look at the consumption of the Kingdom of Saudi Arabia SEC alone is over 200 terawatt hours. The total kingdom is around 300 terawatt hour. Do a simple math. You're looking at anywhere from 60 to 70 gigawatts of renewables that would have to do today to achieve 50%. If you fast that forward to 2030, depending on the increase in the consumption, you could be looking at easily 80 to 120 gigawatt. This is just my back of a napkin quick calculation of renewables. And I think it's fair to say that easily 20% of that can be CNI. You're looking at 20 plus gigawatts CNI and maybe 80 gigawatts utility solar, and the rest can be wind and others. And we'll delve into these figures in more detail with our panelists. We're delighted to have a group of experienced people in their sectors in the solar market that I would like to invite now to introduce themselves. Let's start with Faris. Please introduce your name, title, and your organization, please.
And Dr. Raed, assalamu alaikum jami'an. It's a pleasure to be here with Messi and Solar Arabic. I'm happy to be here myself. My name is Faris Sulaiman. I'm one of the co-founders of a company called Hala Energy, and we work in the commercial and industrial space in the kingdom, building solar projects of scale of a couple hundred kilowatts to a few megawatts. And we've been in the market since 2017, launched out of KAUST. And my other hat is that I'm a researcher at the King Faisal Center and also a PhD candidate. I work on the energy transition, so a lot of the themes that you touched on, Dr. Raed, are familiar, and maybe we'll get into some of them during our discussion.
Thank you, Faris. Stephen?
Thank you, Dr. Raed. Yes, I'm Stephen Molden, VP of Operations for 386 Developments Holdings. We've been operating in the kingdom for the last 2 to 3 years, all in all the last 6 to 7 years in renewable energy in the CNI space. So we now develop projects across the region, small CNI and medium scale CNI, and we're hoping to contribute positively to the transition in the future with the kingdom.
Very well. Mahmoud?
Hi, good afternoon, everyone. Assalamu alaikum. I am Mahmoud Basra. I'm the head of local content from ACWA Power. And as you know, ACWA Power is a developer, investor, and operator for power and water assets, looking after more than 45 gigawatts of power generation and 6.8 million metric ton of water per day. And it's my pleasure to be here with all of you.
Thank you, Mahmoud. So we have two players in the CNI space. One is a startup, one is a bigger startup, let's say. Stephen, if you don't mind me saying that. And we have a giant like ACWA Power on the utility side. So I think the perspectives would be very interesting and encompassing of the overall market. I would like to remind the audience as well to feel free to provide their questions. We will try to address a few questions towards the end of the webinar. We have 1 hour in total for today. Now let's get into the discussion around the market. And I would like to really just try to break it down into CNI, or so-called commercial, industrial, and utility scale. Starting with CNI sector, solar sector in Saudi Arabia. Faris, let's start with you. Maybe since you've started from 2017, really when things were really just announcements, I would say, and not much was happening on the through COVID, and you've survived COVID, obviously, and now things are picking up. Can you give us a perspective on the general CNI market, its beginnings, where do you see the market today, and just the general direction, please?
Yeah, so there's a long story to be told here, but I think maybe it's good to start in about 2016 when there were some efforts at subsidy reform. Just right after the launch of the Vision 2030, there were some electricity price segments, and the diesel price went up in 2016, which opened up the off-grid market, and then some electricity segments, particularly the commercial segment. And there was a kind of group of companies that started around that time. Some may say maybe it was a little early because there was no regulatory regime at that time. We were just building projects in a zero injection, self-consumption manner for mostly off-grid and some on-grid clients. Then over the course of 2018, 19, and 20, then called ECRA, now called WERA, which is our main electricity regulator in the kingdom, came out with a regulation to manage small-scale PV under 2 megawatts, and a lot of our companies, EPCs and contractors, became licensed under this regulation to build projects at that scale. But there was some, let's say, speed bumps along the way. The regulation, though it came to force in 2018, 2019, the different institutions that formed the regulation or formed part of the process were not ready to accept these applications. But this process has improved over the course of time. And last year, at the end of 2022, there was a new regulation that governs projects of a larger scale, larger than 2 megawatts, also in a self-consumption fashion, but with a net billing arrangement and virtual net billing, which allows for some wheeling. Conceptually, this hasn't been, this hasn't been built yet, but there's room in the regulation for this sort of project, as well as allowing third-party investors and developers to participate in these projects. So the space has really opened up from a regulatory perspective. And on the ground, although these things have sometimes slowed down the project development, people have been building projects nonetheless all over the kingdom. There's quite a lot of excitement about the net zero and 2030 targets that you mentioned. So CNI is an increasingly exciting space. There's some things we need to work on the regulation side, both us as players in the market and also from a kind of regulatory framework perspective. But I think most of us are quite excited about the future.
Okay. And Stephen, you agree on the same perspective? I mean, if we look at the hockey stick of the rate of adoption, you're talking CNI now, commercial, industrial mainly. Do you see that we're still on the low side? Is it at the knee now, picking up?
I think we're definitely picking up. I mean, just from a pure consumerism side of things, we're seeing a lot more people interested in solar PV, and it's quite a dynamic bunch of consumers that we're seeing. So we're seeing anything from steel manufacturers to education authorities to plastic and logistics companies. And I think the positive thing about that is that, as Faris mentioned, it was slow on the uptake, but what that's helped do is educate the masses a little bit more than other emerging markets. So what is good for us to see is that when we speak to people about the transition, they've done their homework. They seem to already know what this means for them, what they can expect. They know a bit more about the legislation than other emerging markets. So it's positive. But what I would say is that we still have, I think we still have a bit of time to go before we get full liftoff and full ignition, because as Faris said, you know, it's a big change in the regulatory authorities in November, super positive, you know, very pro transition, but everybody has to align. And I think that's still going to take more time. And I think in order for that to become fluid, it's trial and error. Applications are going to have to go through. We're going to have to go through these teething issues, and we're going to have to see where it goes. But ultimately, I think we're on the curve of trajectory to move forward.
Very well, very well. I want to bring up a point here. I think early in the discussion of CNI and utility, I mean, there is a viewpoint. I mean, it's fair to say that the kingdom, like other countries in the Middle East, has big emphasis in utility scale projects like the ones that ACWA Power is executing through REBDO or PIF. And there is logic that, you know, we're hitting massive deployment rates. We have a very strong decarbonization target by 2060. We're achieving 1 cent tariff or close to it. Why bother with CNI? So maybe this is to Faris and to Stephen. I mean,
I think, sorry.
What are the positives? Why should we do?
And then I'll weigh in. That's fine.
Sure. I know this is a passionate point, but what are the positives of developing the CNI market? Not to take away from the value of utility scale. Maybe you give some perspective on that, especially to people that say, you know what, just do big utility and forget the CNI.
Yeah, I think obviously utility has a much faster impact at an economic level. And at a distribution level. So I think obviously utility always takes the cake, and will continue to take the cake in every market, not just the KSA market, because of the impact it can make much faster. I think the positive of a CNI scale transition is also to give the people the opportunity to make a positive impact of that transition also. Because obviously what we tend to see in these transitions of energy is that utility scale is built and it's operated, but it takes time to see the positive impact on the LCOE from implementation to then get to the people, to get to the off-takers and the consumers. I think what happens directly with CNI is that they can see a physical impact on their OPEX immediately with their transition. So CNI is definitely needed for the people to see imminent change, and to also get that feel-good factor of personal contribution to the vision. You know, the Saudi Arabian people are very passionate about the country and the kingdom itself and their contributions at a personal level, and CNI enables them to do that from a very personal level, from decarbonization, from OPEX reduction and personal contribution. Obviously with the likes of with ACWA, with these, you know, everybody's very happy about these projects that are coming through, but they're not as attached to those projects as they would be as a kingdom and as a community. So CNI definitely helps them to transition personally, faster, and see their impact.
What about, very well, Stephen, but what about the economic value add? I mean, Vision 2030, it talks about diversification, job creation. Faris, maybe you're going to give a perspective with CNI and utility in that regard, please.
Yeah, I'll just chime into what Stephen said and say that, well, a couple of things. The first thing is that the net zero target and the 2030 target are very ambitious. And I think in order to have a reasonable in order to have a reasonable attempt at reaching those targets, it will need to have an all hands on deck approach. I think we'll need both a mix of utility and CNI. And if you look really globally at states that have achieved the fastest pace in the transition, and also we're good at promoting industrial policy. Vietnam comes to mind the last few years. Germany has a very high level of CNI development. You will see that CNI forms a large part of the kind of solar development mix, and I think there's no reason why we shouldn't be the same. It's true to say that the structure of the Saudi economy would suggest that utility scale will have to play a large role. The way that the electricity market is regulated, it makes sense that utility scale will play a large role, but I think it would be a shame if CNI didn't play also a substantial role. And one thing you alluded to also is the labor intensity, for example, of CNI is significantly higher. So the number of people employed, to build and maintain 10 megawatts of solar at the CNI scale compared to 10 megawatts as part of one of these giga projects is substantially higher. So if we really want to create an economy that's diversified and built off of this kind of green energy transition, then CNI can and should play a big role.
Definitely. From a local job creation, CNI stands higher than utility scale. Utility scale is good for localization, manufacturing, and so on. And to your point, if we look at any mature market, Germany, the States, 30-40% is actually CNI. Okay, now let's talk about the regulatory framework. Faris, you've mentioned there are two regulations, and I for one, sometimes I get confused between the initial regulation that was, because it was issued, it was quiet for a while, and there was suddenly another regulation, which was version 2 of that was issued 2 weeks ago, I think, or last week. Can you give us a description of what is the current regulatory framework around CNI, the delineation, the overlap between the two, and maybe talk a little bit about the stakeholders involved in the CNI market in Saudi Arabia?
Sure, I'll try and be brief, and I'm no expert. We have to navigate this complicated landscape ourselves. But just as a brief outline, there's a regulation that manages specifically solar PV projects under the scale of 2 megawatts. This was issued in 2019, and there was another version issued soon thereafter. And the party to this, there's 3 parties to this regulation: the regulator WERA, the Saudi Electricity Company, which is the distribution service provider, and then there's a list of qualified contractors that are able and consultants that are able to participate in this regulation. This regulation is a net billing regulation, and I think a lot of us in the industry had we had some both structural issues with the regulation and also practical ones. The practical ones are to do with mostly the Ministry of Municipalities is the final step in this process. And this has been a slow kind of, this has been let's say, a speed bump along the process. Not many, if any, projects have been regulated all the way to the final step. Stephen can correct me, but as far as I know, no projects have made it through the entire pipeline of the regulation process. So there's still things that we could improve and things that need to be improved in that first regulation. But projects that are outside of the municipalities, the main municipalities, so if they're in any kind of special zone, like Mudun, which is the industrial cities, or King Abdullah Economic City, or Neom, or these areas, they are not subject to the Ministry of Municipalities oversight, and they should have a clearer path towards regulation. And then the second set of regulations is a more exciting one. It's the self-consumption regulation, which Stephen alluded to, came out late last year and covers projects above 2 megawatts of solar and other kinds of renewables technologies. So it includes any other type of renewables technologies, but for solar, it's only for projects above 2 megawatts. And
this is sorry for the interruption, Faris. This is what I get confused. I mean, if you look at it, if you read the last version, it says 1 kilowatt to 30 megawatt for self-consumption, but it says it doesn't override the small-scale solar regulation, which is 2 megawatt and under.
Exactly. Right. So we interpret that as the self-consumption regulation applies to solar PV projects above the size of 2 megawatts up till 30 megawatts, and under 2 megawatts you fall under the regime of the first regulation.
Okay. Rooftop,
yeah. I mean, there are some rooftop projects also definitely in the domain of this new regulation, which is generally, let's say, more progressive in a lot of ways. It removes one of the main obstacles that was present in the small systems regulation, which is a limit on the transformer size that you can. So there's a 15% limit on how much PV can be installed, and there's a kind of difference in interpretation of whether we're talking about the local on-site transformer or the district transformer. And this kind of created some confusion and ambiguity in the first regulation, and this has been removed in the second regulation. So the road is wide open, I think, to build PV. Up till now, we get to the 3% grid capacity limitation, which is the next kind of cap, but that will take us some years to get there, I think.
Yeah. Stephen, you want to comment on the regulatory framework?
Yeah, I think what Faris says is absolutely correct. I think obviously one of the frustrations that myself and Faris are facing at the moment is we are, to all intents and purposes, we have approved projects from the regulator, which is the important part of any aspect of any application. So SEC have approved our projects to a level. And then what we face is an obstruction with regards to the municipalities, as Faris said. So we have a project that is completely, grid studies have been complete, design specification has been complete, design review has been complete. We have all of the non-objection certificates that we need to build these projects, and then we get to a final step where we need a municipality external to that location to sign off, and that's where it stands still. And we're sort of at the we're stuck.
Yeah.
For want of a better word, we're stuck. And I think we would like to see that transition change. We would like to see everybody come together and provide the solution, or at least enable us to move forward with WERA, with SEC, and the technicality of the municipality sign-off can be run in parallel with construction. So there's some slight deviations that probably need to be made. On the whole, it's very positive, but I'm sure Faris will attest to this, that it's frustrating when you get to the end of a project and you've done all the hard work and you're stuck with the technicality.
So maybe it would help if you take an example. Maybe Faris, can you take us through, if I own a warehouse, a factory, I want to install a 3 megawatt system, and I assume the roof allows for that. Take me through the process of permitting. Where would I go? What would I do? And where are the obstacles today? And how can it be improved?
So if you wanted to build a 3 megawatt, we would fall under the new regulation of self-consumption. And we have not applied for projects under that regime because the framework is not up yet. But if we
let's say 1.5 megawatt with current
if we were 1.5, there are a number of steps that you have to take. The first is that you have to be a qualified contractor and engage with a qualified consultant. The client will have to do this, and you launch an application on the online SEC portal with the parameters of the project, and this will then go to the consultant. The consultant actually has to initiate this process. The SEC will then conduct a site visit and will then give preliminary approval for the size of the project based on the parameters, the transformer limit, and these other limits that we discussed. Then it will go through a process of design approval where drawings need to be submitted to the SEC by the consultant. The consultant will need to obtain approval on those. And then eventually you get to a point where you get SEC approval for the project, and they ask you for another approval, which you have to get from a parallel process from the Ministry of Municipalities. And they have their own set of requirements about what the type of understructures you use, the type of roof, the structural capability of the roof to withstand the weight. They have their own set of requirements, and you're supposed to come out with a letter of no objection or some kind of document, which none of us have obtained. And then you refer that back to the SEC, and the process is meant to be complete at that stage. So the process is now mostly halted in two ways. One is in the SEC channel. There's some differences and ambiguities in the way the regulation is interpreted, which slow down this process a little bit.
This is one of the main points. There are ambiguities in explaining or deciphering the regulation as it is, even on the SEC side. This is what you're saying.
This is our impression. Yes, maybe our colleagues will have different impressions.
And this is the growing problems, let's say, like Stephen referred to the teething problem. But the second one is that SEC requires a municipality or MUMRA no objection letter to issue their final approval to connect. And that is not happening at this stage.
Correct.
No.
So it's not happening in certain criteria. I mean, we can attest to in the special zones. So EXA, for instance, in King Abdullah Economic City, we've received a non-objection from those guys. So that one they're supportive of that in that area, and I believe they've foreseen this, so they've been able to implement this at a personal level. So that's quite a positive side for EXA for sure.
And you managed to take it back to SEC and get a final approval and connect, and everything is approved.
So we're ready to move now. Yeah, we're ready to move. We have we have one final comment from SEC with regards to standard commentary. Once we've closed that, we should be done. But yes, I mean that is one out of a potential 5 or 6 Faris that we have to deal with. We probably we're going to have to deal with Mudon at some point. We're going to have to deal with the Royal Chambers at some point. We're going to have to deal with Munra. There's a different individual at different stages, and obviously we will not be able to maneuver through that until we apply to that certain municipality. So if there was a universal application process that all of the municipalities shared, similar to the process of SEC, it might make it easier for us to make this transition quicker.
I think we should write a white paper on recommendations and give it as a nice iftar gift maybe to a couple of officials. That would help.
There definitely been
Mahmoud is
documents
quiet and I know he has a
drafted
lot to
along those
say. So I want to just, before we go to utility, can we talk about the financial incentives for CNI? Because I know there are financial incentives for the program in Saudi Arabia, SIDF being one of them, maybe Faris, and commercial banks, you talked about that, Stephen. So what incentives are there, Faris?
Yeah, I'll just say briefly that probably one of the most progressive and encouraging programs is this program called Mutajaddida, which came from the Saudi Industrial Development Fund like 2-3 years ago now, where a number of us were invited to also participate in workshops that helped form this program. And just a couple of highlights: the program allows for fairly long tenure debt on non-recourse debt at the project level for CNI and larger developers. And this is quite something we don't generally get from commercial banks. And they
100%, 10-year 100%.
No, so it's up to 70%, and it depends also. Well, initially it depends also on the location of the project, where they have some incentives to focus on some, let's say, non-urban areas and have higher percentages. And then you have some very strong features like a 3-year grace period and these long tenures and fairly attractive rates. So it's quite a strong program that was developed over the last few years by the SIDF.
Do you know anyone that has gone through it and received funding for solar installation?
Yeah, so you can. The program is also can also be applied to by individual clients, and we found that clients that have relationships with the SIDF for other industrial debt programs tend to have success with this program. But us as a developer, we're only now beginning to use these programs.
Because I mean, SIDF is meant to support industrial operations, and you're a developer, so you're not recognized. So the guy who, I mean, the entity that gets the loan is the factory, not you.
Well, no. So this program was specifically developed to open up the kind of scope and mandate of the SIDF to include support for developers.
Okay. All right. Beyond financing manufacturing operations.
Exactly.
Correct.
Stephen, what about local banks?
So I think local banks, as far as said, it's a little harder. We are working with local banks at the moment to start creating a framework in line with similar outlooks as SIDF. We're still navigating that now. It's not formalized, but they are open to supporting at a customer level and also at a developer level as well. So the structures can be right now cannot be obtained, but will be able to be obtained in the future for sure. And obviously you're going to have such incentives that hopefully the government will release. It's whispers at the moment, but hopefully in the future there's going to be carbon credit monetization as well, so that you can, the offset of carbon emissions can be monetized. So it makes that more lucrative for the client. So we're hoping that these things pick up at a CNI level as well, holistically, rather than at a higher level, so that we can continue to push the positive transition. Because we can sit here and we can say, the feel-good factor and the transition and Vision 2030, but the ultimate goal for any off-taker is OPEX. They want to, and especially coming out of a period of time where business has not been easy with COVID and with other issues with regards to inflation of commodities. I mean, a lot of people are being hit just by increasing commodity costs. So they're not only coming out of a time where they've not done business, they're actually going into a time where business is more expensive. So people want to look at OPEX holistically, and once we're able to incentivize them higher than just kilowatt hour contribution and savings, it's going to make the transition to CNI and it much easier. So, and I think what's good is we're hearing whispers of that at a government level, and I think hopefully that will transition in the next couple of years to aid us.
So the main motivation is the reduction in OPEX, and you can calculate that on reducing the electricity bill on a monthly basis.
Yes.
The point you mentioned, Riyadh has a voluntary carbon market. I think carbon credits is an adder to the financial. It's
an add-on to an otherwise people look at carbon now in various areas in the world. They look at carbon as a feel-good factor, less contribution to an existing existential problem of climate change. Now, that's fantastic, and we all should be thinking that way as professionals in this industry. But at the same time, you have people that also think that their contributions don't matter. They think they're a small contributor to a much bigger problem. And if you incentivize that through what everyone wants to see, which is a monetary incentive, you will see a much bigger uptake for sure. And what we see at a corporate level is companies now with ESG compliance with regards to decarbonisation in line with Vision 2030. They're trying to do that at a much bigger level. So some of them are actually driven by carbon depreciation and reduction. So if they can see a monetized element of that, it's going to go the trajectory will go from here to here much faster.
How about, I mean, very well. These are all good points. What about the residential sector? I mean, often we ignore residential, but I mean, do you see any uptake in the residential sector? I mean, maybe not for you, Stephen, I don't know, Sun in Motion, but Faris?
Not particularly, to be honest, because we have the highest installation cost on these rooftops. And we have still a high compliance cost. It's quite similar to the other types of compliance that we discussed. And we have still kind of, let's say, mid-level tariffs or fairly low tariffs on the residential scale in Saudi. But if I was going to kind of expand from what we said, we spent quite a bit of time on this regulation and saying that there were some bottlenecks to these CNI projects. But there's really these bread and butter CNI projects are only one of maybe 2 or 3 pathways that CNI projects get done in Saudi. These are classic kind of on-grid rooftops. We do have these giga projects and sustainable cities where there's a number of projects that are kind of outside this regulatory domain. There's a lot of excitement around those. We are bidding on a number of projects in these new cities. And then there's still a very healthy kind of off-grid segment in Saudi with custom systems. We're building agrivoltaic systems all over the kingdom. We're building a custom green hydrogen project on the West Coast. So there are these other kinds of projects that are also exciting. And hopefully if these bottlenecks in the bread and butter kind of CNI scale get unclogged and the systems kind of begin to be developed, then that can also contribute to the growth of the sector.
Do I need to go through a permitting process for an off-grid application?
Technically, you do under the new self-consumption regulation, but that hasn't been, let's say the process hasn't been developed yet. So off-grid projects tend to be built all over the kingdom. There are dozens of them being built at the moment. So
I think the general rule of thumb with the off-grid side is that you follow the right protocols, the right legislation, the right quality. But yeah, Faris is absolutely right. Yeah.
So I can't help but ask the question: what's going to happen to all those who have installed and connected PV systems to the grid today? Waiting for approval by Mamra or hoping for the best?
We probably heard contradictory things. I mean, one of the things I have heard is that there will be fines for anybody that has connected a system without going through the correct processes for the application. And obviously there's
assuming that they're functional, obviously. I mean,
assuming that they're functional and they're contributing to the off-taker, there will be fines. I think obviously there's a lot of projects that have been built ready to essentially apply to get them directly connected. So I think they'll be seen in a bit of a different light. But from what I've heard, anyone who's connected, they may receive a fine from SEC.
I think they should be awarded for opening the market, but anyways, I think they need to be regulated and accounted for and follow the code. All right, enough with CNI. I think there are a couple of questions. We'll take it towards the end. We'll shift now to utility scale. Mahmoud.
Allow me, if Dr. Raed, to take a little break to ask the people a couple of questions, just to also get to know the viewers. Yeah.
Yes.
So you get to know our speakers today, and before jumping into a heavy topic, utility scale PV projects, let's take a short couple of poll questions. The first one, we wish to know from what country you join us today. We obviously expect a lot of people from Saudi Arabia. But probably we have people from other countries as well. So please vote if you are in Zoom, and if you are watching us on social media, as we're broadcasting this on LinkedIn, YouTube, Facebook, and Twitter, then write that in the comment. Please write in the comment which country you join us from, just to get to know you as well, and to probably tailor the last part of the session depending on that. I see that we have 26%, 27% from Saudi Arabia, 24% from other GCC countries. So 50% of attendees are in the GCC countries. And we have also people from Jordan, Palestine, from Lebanon, Syria, Egypt, and Tunisia, Morocco, a lot of regional, let's say, players in the market, with also 25% from outside of the MENA region. Probably this also expresses the interest of global players and equipment suppliers that have definitely interest in the Saudi market. We'll share this briefly on the screen just for everyone to see pretty quick, and then we'll jump to the next question. Next question was to know your industry, please. If you work for a developer, an EPC, service provider, or an O&M company, an investor, academia, or if you are a consultant, then please let us know. This will also give us a feeling about the different parties that have interest in the Saudi PV market, and so far with approximately 70% responses. Please, those that are not on Zoom, write that in the comments on social media. And I see that we have 20% EPCs, 15% developers, 11% service providers, 25% consultants, and this definitely shows us that the whole ecosystem is in here. And definitely this explains a lot of very good questions that we have received from the audience so far. And I encourage everyone, please, to share your questions in one message in the Q&A section instead of the chat section. This will help us later on to moderate answering these questions in the end of the session. Thank you very much. Sorry for taking these couple of minutes, but I think it was useful to get to know our audience today.
Very well, very well. All right, utility scale. Mahmoud, can you please take us through, I mean, the Saudi Arabia, like other GCC countries, is known for the utility scale market, obviously. Can you take us through just a quick brief on the status of the market? What are the current projects underway, operational, the split between PIF and REBDO? Yeah, go ahead, please.
Sure. Thank you, Dr. Ad. I think you already touched upon it a little bit at the beginning, but I might reiterate that. Would say, if we look at the main drivers of the market in Saudi Arabia, mainly you would have, I would say, the renewable program. And then also you have, I would say, the green hydrogen or the hydrogen, I would say, demand. For, let's say, the renewable program from the ministry, you would have it split at 30-70, 30 through REBDO, through competitive bidding, and 70% through PIF as a direct negotiation with the investors. Now, if we look at it, and for the hydrogen, I would say, this is not, I would say, to be announced, but we expect a lot of demand for the renewables to come also from green hydrogen projects. If we look at the example of the project developed by ACWA Power and their products, the new green hydrogen project has around 4 GW of power renewable, split between wind, PV, and storage. Now, if we extrapolate several of these projects, I would say within the next couple of years, with the targets of Saudi Arabia of hydrogen production and decarbonization, you can expect, I would say, a huge demand to come from hydrogen production. Now, if we look, I would say, at the renewable program, as mentioned at the beginning, we're looking at, I would say, the targets from the ministry is around 50% of the generation should come, I would say, from renewable sources. And with the rough calculation, also, I shared the same figures with you, Dr. Raed. We're looking at 40 plus GW within the next, I would say, 7 years. Now, looking from that, I would say, cascading from that, we have several projects, let's say, under REBDO or PIF, which has been awarded under operation. And let's say, if I can talk about, say, the assets that we do, that we own from ACWA Power, we have SKAKA, which is around, let's say, 300 MW. This is currently under operation. And several projects under construction, Sudair, Ras, and Layla, with around, let's say, 1.5, 90 MW and 700 MW, respectively. And finally, we just announced, I would say, a Shu'aiba PV project with around 2 GW capacity. And this was around, I think, was announced in the last quarter. So these are the projects.
What is the tariff on Shuaib? I think it was close to 1 cent, right?
This
Was
was a
that
say for
announced?
Shuaib 1. It's 1 cent, 1.04, 1.07 cent, and that was say for Shuaib 1 project. So these I would say all the projects that have went, and currently there are bidding, I would say, for RIPDO 4 project, which has been announced for combined, I would say, between solar and wind. It's around 2 projects for solar and 3 projects for wind. And this will also say take me to the next, I would say, topic is about, let's say, as we see the demand increasing in Saudi Arabia, we need to keep in mind that, you know, if we consider Saudi Arabia as a market, that, you know, there is a big focus from the government and from the decision makers to localization and local content. Okay, this has been going, I would say, hand in hand with Vision 2030, but I would say these figures has been, I would say, now identified and fixed, and now they are translated into execution with the project that we see. Now, if we look at the Vision 2030 from an overall perspective, the overall target is to reduce dependency on oil, basically. And then you have the vision programs, and then you have the local content targets. And this has been, I would say, cascaded to the execution or to the executive ministry. If we look at the energy market, now it's mainly driven by the Ministry of Energy with around 75% localization target by 2030. Cascade that target through the LCGPA, the Local Content Authority, who is responsible, I would say, for translating these targets into the public tenders. Now you see around for the renewable projects, we have seen the local content target per project raising from, I would say, 17% to 18%, and currently we see around 19% local content target, and we expect that also to be around from 30 to 40 by 2030 to meet, I would say, the localization target set by the Ministry of Energy.
And how is that calculated? You said in RIPDO round 4, it's 20% local content requirement?
Around 19.
19. How is that calculated, please?
Okay. Now, if you look at the calculation of LCGPA, basically, it looks at all the cost that you have spent for the project across, I would say, 5 verticals: goods and services, the labor, the capacity building, and R&D, and finally the depreciation and amortization. So it looks at all the aspects of the project. It looks at the overall, the local cost or the local content portion of the spend versus the overall project cost. And with that calculation, you would reach, I would say, the target of, I would say, 19 and 20. And each aspect of the goods and services has a certain weightage that is applied to it. Now, this, I would say, will take me, say, to the next portion, which is important also to look at, is that as also the government or the off-takers are looking at local content, they are also in parallel at looking at localization, which means now we are starting to see requirement in the project for a certain portion of the products to be procured from Saudi facilities.
Because they're driven by the fact they have to achieve the 20-21%, becoming more and more difficult. They have to buy local product.
Exactly.
Yes.
Exactly. So we start to see that, I would say, a certain portion of the modules must be procured locally. We see that certain portion of the wind turbines must be procured locally. And even beyond, I would say, the renewable energy, we see that also portion of the gas turbines and other component must be procured locally. And this is something that we start to see in the last year or so. And we expect that also to increase from now until 2030. And this presents, I would say, a great opportunity for all the manufacturers, for all the service providers, and also for the EPCs and developers to keep in mind that this is where the market is heading. And I want also, I would say, to comment on the incentive from SIDF that my colleague Faris just mentioned, is that also Mutajaddida, as it covers also IPP and developers, it also covers, it has a certain program for solar manufacturers for around 15 years, I would say 10 years, and with relaxed incentives. And there are a couple of facilities and OEMs in Saudi Arabia who benefited from that program, either I would say in the solar PV market or even from tracker manufacturers and other components.
So what has the localization policy and mechanism with LCGPA has achieved so far? I mean, there are Manufacturing, are we looking at modules, inverters, trackers, steel structure? Maybe give us a perspective. What made in Saudi Arabia across the value chain exists today for solar, speaking about solar specifically?
Okay. If we look at solar, then definitely I would say you have the EPC or the construction and the materials. This is already existing in the kingdom. You have majority of electricals. Apart, I would say maybe from DC cable or several or some, I would say, very specific components, but you have, I would say, a good portion of electricals have been already existing in the market with the effort of SEC and Aramco.
You talk about switchgear, cables, DC cable, AC cable, switchgear that exists, transformers that.
Exactly. Yeah. All of this except maybe for the high voltage transformers and switchgear or extra high voltage transformers. This is still say there is a gap in the market, but this is part of the work that is happening, I would say, with the authorities and the stakeholders to localize these products. But maybe something specific to the solar is the solar PV manufacturers. Now we have around maybe 3 to 4 in the kingdom. And they are, say, developing at a very good rate. They are supplying and they are exporting, I would say, to other areas outside of Saudi Arabia as of now. So there is some good story there. And also for the trackers, now we have, I would say, several tracker manufacturers. Some of them are working with a license from international OEMs, and some of the international OEMs actually they have established in Saudi Arabia. Now this market has been developed, say, in the last 3 or 4 years. There has been some effort, I would say, doing from many stakeholders to develop this market. But currently, I would say it is one of the key components that are localized. And usually, when it comes from the off-taker point of view, these are some of the non-negotiable items that must be procured from the local market. And in parallel to this, one of the efforts that is done by the LCGPA also to enable the local market is that whenever we have enough capacity, usually, I would say they include it as part of the mandatory list procurement, which can help, I would say, all the manufacturers who are planning to come to Saudi Arabia.
This mandatory list applies only on government projects, doesn't apply on private projects, private sector projects. Is that correct?
Currently, yes, but we are seeing that it applies to the government tenders.
Government tenders. And I think there is a challenge that you can, if there is only one factory doing PV, it's hard to add that factory as exclusive. That would be a monopoly. So they need 2 or 3 suppliers to be able to mandate that as on the mandated requirement for supply.
Typically, this is the process. I cannot speak on their behalf, but I would say from our engagement with the authorities, usually they look, I would say, at multiple manufacturers. They want to avoid the same thing, because ultimately what we need to achieve, I would say, is a competitive LCOE at the end of the day. And having a monopoly definitely will not play into that part.
Okay. Anything on the inverter side happening in Saudi Arabia that you know?
I believe there has been several efforts, I would say, from multiple OEMs, but I believe this is something yet to materialize and to be announced. But as of now, this is not yet localized, and there are a lot of components and a big roadmap, I would say ahead of us. But you know, we take it one step at a time.
Yes, yeah. It's not easy to localize inverters. It's seen as a simple thing, but in reality, it's actually more difficult than what it looks like from the outside. What about the role of the Saudi Export Bank?
And let's say,
talked about SIDF. What about the Export Bank as in financial incentives?
Yeah, this is, I would say, another incentive that are provided to developer basically, and this is something that that we as ACWA Power even benefit from, is that Saudi Exim, they provide the financing for all the procurement for procurement item from Saudi Arabia. I think up to a certain, I would say, multiplier with the procurement, and we usually utilize, I would say, this incentive to support our projects outside of the kingdom by procuring from Saudi Arabia directly. So this is one of the incentives that has been developed, and it helps us, I would say, big time with our projects in Saudi Arabia. And also opens the market for the manufacturers, not only to be supplying to the Saudi market, but also, I would say, it opens to them the opportunity to export. And we have done this with a lot of our suppliers, where they support our projects outside of the kingdom from the Saudi facilities.
Okay. Very well. If anyone has any other comments on the utility sector, please go ahead. Otherwise, we're getting close to the end of our hour together, and I would like to go through a couple of questions if you don't mind, I think you have access, everybody has access to the Q&A. There is at the top, there is how do you explain the 3% grid capacity limit? How do you calculate it? Faris, you want to take that, or how is the 3%?
Yeah, I mean, they calculate.
And how does that change year on year?
3% of last year's peak load, as measured by kind of the AWERA reports that come out on an annual basis. So I don't know what the number is. Let's
So
say
last year peak was around 65 gigawatt, I believe.
a little bit more, maybe 3% or 70, something like that, and that would be 3% of that figure. So 2 gigawatts, let's say.
Roughly 1.92 gigawatts.
Yeah.
And this is the current capacity limit today. And how much PV is on the grid today in Saudi Arabia? Anyone has
a commercial scale?
Forget utility. I mean, utility aside, CNI. Low voltage CNI, up to MV, up to medium voltage.
Let's say under 500 megawatts.
Under 500 megawatts. So we have ways to go on we have 1.5 gigawatt to go on MV.
And most of that 500 was built before the regulation. So.
And Stephen says they will be fined, all of them. So after
that. That's a lot of fines.
I hope not.
But I think to add to that the calculation, if you take a look at that, it's actually being calculated on peak load rather than potential. That's actually beneficial to the growth of the market, because obviously a lot of people will say the infrastructure has a capacity of X right now, and they're not moving forward with transition, and you'll be capped at some point. Whereas obviously Saudi is growing. I mean, in Riyadh alone, I believe in January, there was an extra 6.6 million people that moved to Riyadh, which is an astronomical number. So obviously the infrastructure needs to grow with the capacity and requirements of people, regardless.
So the number will be revised year on year.
So I think that shows that it will be revised year on year, and that it's not going to be based on the capacity of the infrastructure. It's going to be based on the progression of the infrastructure. That's what I take from that. I think that's quite a positive calculation.
And by the way, my take on the second revision of the self-consumption regulation, it reduced the scope compared to the first version. I mean, now it says generate and consume on-site as the condition. You can do multiple meters if you're an owner of different facilities in one location, but you can't do wheeling and then wheel energy, which was allowed, by the way, on the first read of the first version. So I think that's gonna, limit things a little bit. But
there's a bit of disparity there, because I think there is an opportunity to do that, but it depends on whether you are transmission or distribution. I think there's something that needs to be clarified on wheeling. I think it's possible to do, but I think it depends on the kilovolt ampere rating of the transmission network, and that needs to be clarified. So that's definitely something that right now has been changed, as you rightly said, but I believe that there's actually another layer above of where that comes into play.
Okay.
Dr. Rai, there's also a capacity development story here, right? Because if there was wheeling that was allowed immediately, but the infrastructure and capacity from a regulatory perspective wasn't there to deal with these kinds of requests and demands, it would create some confusion in the market. So there is some hope that capacity is developed first, or at least a minimum kind of capacity is developed first to deal with these requests. Then regulations are put into force so that they can run more smoothly from the beginning. There could be more transparency and predictability. So we can hope that maybe some of these features that we saw launched as an idea could return at a later stage once capacity is developed, and that would be a pretty rational way to deal with this thing.
Okay.
Yeah, because many other markets have hit saturation super quick. As soon as they say, oh yeah, you can do this, immediately within a year or two, they're saturated and infrastructure can't keep up, and the regulatory authorities are asking for non-contestable upgrade works directly to the person who's developing. So it's a rock and a hard place situation.
There is a question on PPAs. I think it's important to clarify. PPAs apply to utility scale projects where you're selling energy to the government, to the principal buyer. But in CNI, it's not a PPA. It's an equipment lease or a service. So maybe that's a point. I think that we talked about.
I think you covered that. I think that's the actual difference. I don't think there's one of them is effectively a lease, and the other one is essentially selling power. So they're the differences.
Yeah. Is there a policy in Saudi Arabia for CO2 emission penalties, credits? As far as I know, there is the voluntary carbon market that's been announced last year, I believe. Already Aramco and SABIC and Boeing and a few other companies, they managed to create a few assets, carbon credits, I should say. But there is no scheme yet to penalize or credit for CO2 emissions, cap and trade or anything like that, as far as I know. You guys agree?
Yeah, same. I think for us, nothing that we can see. Maybe it will come online, but nothing right now.
It's probably likely that you need to see some further efforts at subsidy reform so that we have electricity prices that are reflective of the generation, distribution, and transmission cost. And then after that, you could begin to see any kind of cost added for carbon credits or for offset. So in all likelihood, one would have to come before the other. And fuel prices have moved many steps in that direction. Electricity prices are still a little bit further behind.
Yeah.
Yes.
There is a question, Mahmoud, on local content. I mean, this is always an argument here from suppliers. Why should I come and go through the pain of opening a factory and hiring people when I can feed things from China or India? And they always watch the market. When do I have to be in Saudi? Do you think we have to hit 25% local content requirement before people would say, well, I have to be in Saudi to sell in Saudi? Or do you think it's already here or happening? I mean, we saw early movers with PVH and others localizing, but it's a good question, I think. How do you see, when is the tipping point?
Okay, I think it's already happening. Okay, what we have seen, I'll say, from even at 18 or 19%, I would say you already, exhausted most of the common items that we would procure locally without any contribution from the major component. I think I would say at 19, where we are today, and with the specific requirement of the local content authority, I think I would say now is the time to be, I would say, in the market. I believe when we reach 20, 25, then there is no way that you can achieve, I would say, such target without a major contribution from the solar, from the PV modules, without having 100% of the trackers procured locally, or even some contribution from the inverters at some point will need to be there to achieve those targets. So we have seen the announcement of LONGi and PIF for, I would say, development of manufacturing in Saudi Arabia. And this is one example of one of the major OEMs in the solar PV market who are coming to Saudi Arabia. And wish that also materialize, that will definitely support the market. And we've seen already a couple of players, and we see interest from other OEMs to come, I would say, see where is the market. And there has been, I would say, some MOUs with Envision for manufacturing of the wind towers, for manufacturing of wind turbines in the kingdom. So we see major OEMs for major components are, I would say, taking advantage of the first mover, I would say, advantage for these projects. And we see now the requirement at the RFPs or the contracts awarding these players who came first and invested early in the kingdom.
And it's interesting, we see international OEMs coming in, but also we see local entities like, obviously PIF is working on the module manufacturing, as well as entities like Al-Fanar. Dusur, is Dusur having a role to play in localization?
I can't speak on Dusur's behalf, but I mean, if we look at the mandate of Dusur, I would say as an industrial fund, enabling, I would say, investment, we've seen their contribution to the market and many investment when it looks, for example, I would say, because this is back in the day when I was General Electric, their investment in GSAT for, I would say, for the manufacturing of gas turbines in Saudi Arabia. Now, this is JV between General Electric and Dusur to establish that facility for the advanced gas turbines in Saudi Arabia. And they have a lot of, I would say, different investment across multiple sectors. But mainly it's to unlock localization and to bring industrialization to the kingdom.
Do EPCs, contractors, need a license to build solar plants, and same with consultants?
Is that for us?
Yes.
Maybe someone else can take it. Go ahead.
Yeah.
Yeah, we do need to get licensed under the well, there's two steps. We need to be licensed. So individuals in our team need to be licensed as senior or junior project managers. And this is, there are courses that are run by a number of different educational institutions and then tests conducted by the SEC. And when we accumulate enough of these team members, then we get qualified on larger and larger projects. This is up to the 2 megawatt limit. For the larger projects, which are now under the self-regulation, self-consumption regulation, there's no such regime that has been set up yet.
Okay. There are a couple of questions directly. One for you, Mahmoud, from a student. There are, I mean, is the wheeling allowed in KSA today? My reading to the regulation, wheeling is not exactly allowed. It had better mention in version 1. Version 2 is redacted a little bit from wheeling, but I think like any policy, like any regulation, it's an evolving entity, and it will be adapted and modified as the market grows. More questions. 3% is 3%. I mean, it doesn't include utility. I mean, the law says 3% of peak load regardless of what PIF and REPDO has installed. So that's 3. And that falls on distribution transmission. Peak is peak. It doesn't matter whether it starts at transmission, goes to distribution. All right. Munif can advise market trends. Okay. All right. So I think this is good discussion. We passed the hour. I want to close out maybe just by final notes. I think it's very valid, the concerns and the points that were raised. Saudi Arabia remain poised to be the largest CNI and utility scale market. There is no contradiction between the two. It's not one or the other. It's actually both. And we were happy to see CNI hitting 20% easy, and I think it needs to hit 20% for the obvious pluses in CNI that augment and support the pluses in utility. For each of our panelists, what's your view on 2023? Do you think this is the year where you'd see a serious uptake in deployment? So if you want to make a guess, how many megawatts you think the market will take in CNI? Stephen?
I think we can expect probably to double what we already have done this year. I would hope to get somewhere. So where we are currently now is about 500 megawatts of deployed CNI. I would hope that we can get at least 500 megawatts of deployment, and the remaining in Saudi. Okay. I would hope to get there. I mean, there's a lot of applications in there. There's a lot of projects that are baking and boiling away. There's a lot of interest in the market from a pipeline perspective, and it just takes that little knock for everything to open up, and the deployment will be super positive. But at the same time, it could be the knock doesn't happen and we're in the same place as we were last year.
There's always 24, right? But I hope 23.
There's always 24.
Yeah. Faris, what's your view? Positive?
Positive in the long term, but I don't think we're quite there yet in terms of the hockey stick curve. It'll happen, if I had to predict, somewhere in the mid-2020s. But I think 2023 and 2024 are likely to be much better years than the years before. So there is improvement, but maybe not takeoff for the CNI sector just yet. But it's coming. Every year is the growth that we're experiencing year on year is healthy enough, but it's not that Vietnam or steep moment. That's from Mahmoud and the Aqua guys for now.
Yeah.
Mahmoud, I think you're settled with utility scale. I think you have enough on your hands. I don't think you need more. You're busy enough.
Definitely, yeah. We see, I would say a huge momentum from, I would say, the solar projects and renewables, and we see round after round of projects are coming in the pipeline. And definitely, say the momentum starts to pick up since last year, and we see it accelerating in 23, and we expect it to keep the same momentum or even faster, I would say, toward 2030 to meet those targets.
Very well. And one point comes to mind. I mean, we went through this in CEDC and Messia in Dubai with DEWA. I don't know how much dialogue exists between the private sector and the government, the entities involved in the permitting. It's probably happening on an individual basis, but utilizing entities like Messia to write white papers, to give things from a holistic viewpoint, I think is of great value. It will help accelerate things. Because at the end of the day, regulators, private sector, they want the benefit of the country, and the country to hit its targets that have been announced. Very well. With that, Munif, do you have any last comments?
Yeah, definitely. I wish to start by thanking the attendees today. We had hundreds of people attending the session today, which definitely gives a very good representation of the big appetite towards the Saudi market. I wish to thank our panelists and our moderator today for the very insightful discussion. Dr. Raed, you managed to run through very complicated, let's say, topics, unclear process, covering all the segments, residential to CNI to utility scale, and helping the audience to get the best knowledge from our very knowledgeable panelists today. Faris, Mahmoud, Stephen, thank you very much for the experience that you have shared with us today. It was really helpful and raised plenty of questions. We've got, I think, at least 100 questions between the Q&A section, chat, and social media, and a lot of requests to repeat this in Arabic. So if you have the appetite, then maybe
Stephen
we'll
has
do
to
this.
work on that a little bit.
Yeah. Stephen, we'll give you a couple of months to learn Arabic. Yeah.
Yeah, I'll be back in June.
Yeah. Speaking of June, I wish to remind everyone that we'll be having 2 days trade mission event, also organized by Masia, who is the organizer of this webinar and the upcoming event in Saudi Arabia. If you think that you can, you wish to join or you wish to participate in the panels and in the conference, then please drop us an email. I've sent my email in the chat multiple times. So I hope to see you all there in Riyadh on the 7th and the 8th of June. And definitely after that, we'll come back probably with another run of this topic in Arabic, so we could reach to the majority of the people that are, let's say, interested in the Saudi market. Thank you very much. Thank you, Dr. Raed.
Thank you, everyone.
Thanks to the panelists. Thank you to the audience. Drop us a message anywhere, social media or email, if you have any comments or feedback, so we could improve the next time. Thank you.
Thank you, everyone.
Thank you.
Bye.